Hey, it's Clay Trader, and this will be a video chart on ticker symbol BYOC. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually just today's price action broken down into 30-minute time slices. I like to this time frame. I think that's a good job of telling the quote-unquote story of the price and makes mapping out levels of support and resistance a bit easier to see. This analysis from a presentation standpoint is pretty tricky because there's a whole lot of perspective that goes into it. What do I mean by that? Well, if you're a day trader and you bought somewhere up around here and you wanted to sell within 5 minutes after buying, then yeah, for you, the chart's looking pretty rough. Now, if you care about the big picture of things, then I get it. The price did pull back today, but from the big picture, the bulls do still have an opportunity to build a higher base, and as long as you have higher bases being built over longer periods of time, that's how those long-term uptrends are constructed. I'm going to be talking about things from a big picture perspective. So if I sound crazy calling something bullish, my guess would be you just had a different strategy and outlook going into the trade. And really the easiest way to symbolize the overall, kind of trend of things revolves around a very important rule in the world of charts, which states when levels of resistance are broken and closed above, you want to see them act as support. So for those of you that have watched the videos of mine from the past, hopefully you remember me talking about 0.023 as resistance, but like I said, now that that is broken, the rule states you would like to see it act as support. And surprise, surprise, I mean, you could throw this right into a textbook if you needed an example. Check that out, right where the price ultimately bounced from today. So 0.023, like I said, is that level you'd like to see act as support, and that's the exact level that did indeed act as support. And going forward, that is certainly the ideal level that you want to see the price maintain above. In the event the price cannot stay up above that area, the next key overall area of support down here at the 0.021 mark. As far as levels of resistance are concerned, I'm not going to touch on those because in my opinion, right now, top priority is not breaking levels of resistance. Top priority is just going through a healthy consolidation and building a higher base. Case in point, right here. So let me just kind of illustrate this better. All right, that line's kind of irrelevant at this point, so let's do a little house cleaning there. So why resistance level is not important? They're important, but at the same time, if the price just keeps doing what it's been doing in terms of building higher bases, then as you longer-term holders have witnessed, the long-term chart has continued to take care of itself, which includes breaking areas of resistance. So yeah, resistance is going to be fun to talk about, but just keep building those higher stair steps and let the chart continue to take care of itself. One of the biggest questions that I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.